Hey traders, this is Ron Haydat Markets Hamer. Happy Tuesday. Hope you're having a fantastic day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. We'll kick off here with the DIA, the Diamonds, the Dow ETF. There was an inside day today. It only rose a whopping 36 cents, so it is considered to be an inside day. So after yesterday's bigger volume sell-off, we bounced right off the 200-day and then a little bit of a move up today. Finished well off the highs though. If we take a look at the S&P 500 ETF, the spiders, which I have a long-term bullish position in, zoom a little further, you can see inside day. The SPY finished up a whopping 0.22%. Take a look at the Qs. They finished higher by 0.4%, not a whole lot better. Again, inside day. And if I go to the IWM, which is the Russell 2000, inside day finished the best, up 0.58%. Volume was actually sort of decent for an up day. You can see how it compared to some of the others. So the outlook for the rest of the week, now that we've had a little bit of a bounce, is still short-term bearish. A lot of these indexes are below their red line, which is the 20-day EMA, and they're not even back above the 5-day. So I want to just use some caution this week. I'd go neutral to bearish on the 5-day outlook because we're below moving averages. Longer term, they're still holding up above the 50-day, except the Dow. So longer term, we can still say the trend is intact. But right now, we're just having a little bit of profit taking. It seems, whether it's the Supreme Court ruling, whether it's the tariff, the trade war, which is complete bogus. They're making it sound like that's going to kill the market. It will not. There's always been issues with trade. So we're just going to not trade what we think, but we want to trade what we see. And if the markets break down, whatever quote the headline cause is, that's fine, but we're going to take it as it comes each day. All right. So let's take a look at VIX, down 8%. VIX is down below 16. Now you could say it's coiling a little bit. We had our pop, or it's just pulling back. It's still bouncing. That's all true. Again, just caution. I wouldn't get too bullish or too bearish right now. I'd rather see how this shakes out. Keep in mind, we're in the summer. Historically, especially when I use the data at financial.com, the next 13 weeks, the S&P Dow are basically flat. There's no major move either way. Once we get into September, October, that's when we start seeing a better bias as the market outperforms November to May. All right, let's take a look at Red Hat. This was a stock in the news a couple days ago. It has hit the 200-day moving average. That was the target. We're there. The next target is down here. It closed at what? 160. Sorry, it closed at 138.46. The 200-day is 138.59. Technically, we're about 13 cents below the 200-day. That's not enough for me to call it a clear break, but a little lower. Then we come down here to 130. That's another $7-8 lower. This one's still looking bearish. We take a look at Tesla. This thing is really squirrely. It's up, it's down. There's a lot of bad news, bad press out there about Tesla. Now there's even allegations of somewhat of a fake warehouse or something, or at least it's a warehouse where they say, according to the article, nothing's going on. Then there's a Tesla crash, and then Musk is buying more shares. So no matter what side of the aisle you're on, bullish or bearish, there's all sorts of news out there. Yet the stock just popped up 70 points in about 2 weeks, and it's pulled back 30, and now we're bouncing. Short term, we could argue this is a cup and handle, and it's bullish. Just beware on Tesla. Here's Harley Davidson. They've been in the news recently with putting jobs overseas. There was a rally into the 200-day. We just got above it on the 15th. Now it's pulled right back. If I go back to a 5-year chart on Harley, we're at basically $40. That's where the support is. Below that, we start getting down into the mid-30s. So heads up on Harley. When I see this type of action on a stock that I might own, I don't own Harley, but if I did, that kind of rejection, this is protective put time, or maybe better yet, collar trade, just to protect capital until this shakes out, and then I can go in and tinker with that collar trade and make it more bullish or more bearish. Marriott. This stock's been on a really nice run for a hotel stock. Remember, they acquired Starwoods, which is one of my favorite hotel chains. It's been moving up real nice. It peaked in January with the overall market, and sort of like the S&P, going nowhere fast, except now it's cracked the 200-day as of yesterday. Today, inside day. The next support for Marriott, guess what, gang? It's all the way back here. Basically, it's 100 to 105. We could argue that's 25+% lower. I'm not saying it's going to get there, but if the selling pressure picks up a little bit, there were no big pauses in here for buyers to come back in and say, oh, it bounced there before, maybe I want to buy again. This was pretty much a straight charge. So if the news stays bad or negative, or there's nothing to send this stock higher, just heads up, this would be protected put territory for me if I was teaching a class on it for something like for Marriott. Support's been broken. Volume picked up a little bit. It's looking precarious. How about TSRO? TSRO. I highlighted this a few days ago. We had our breakout. Now we've rolled over. This is a dead duck. It popped up. Now it's closed below the red line. I know volume is light, but it's still closed below the 20-day EMA. I would cut this one off immediately, wait for it to get back up, and now it has to close above the previous breakout. And that close was 49.62. I would say $50. It's got to get back above 50 before I'd be interested from the long side. And CVS is another stock that took a bit of a hit today. Got back below the 200-day, down 2%, but the red line would still be the trailing stop. This thing broke out. It's coming back. As long as it back tests the 20-day and then bounces, the target remains up there in the low 80s. I still think it has nice reward to risk potential, at least for me. Plus, we had some really nice volume starting to come in here when compared to the red volume with the down days. So that's it, folks. Wish you guys a great rest of the week. I will see you here tomorrow night. Have a good one.